Everyone, I'm Ernie Humphrey, the CEO of Treasury Webinars. Thrilled to welcome you to our webinar today. This webinar is the first in a series of webinars that I'm partnering on with Avallone around the topic of KYC, what we've always come to know in Treasury as I know your customer. And there's just an awful lot going on in this arena. The view is shifting to know your counterparty. So today what we're going to do is we are going to have a view. We're going to take a look at where we've been as far as how most people see a KYC and then how that has been evolving. So it's almost like whether you like it or not, you're going to have a counterparty perspective, because what you will see if you haven't seen is your banks are asking you about your suppliers and your customers. So even if you thought you were overwhelmed with giving them information on your own company, you're going to start to get that. And what I think is going to happen is the SEC reporting and other things are going to start to require that analysis as well. So before we dive in, our first webinar here is the evolution of KYC and Treasury. A compliance task, I was going to say annoying task, but I got to be nice to the banks, to strategic risk management. Thrilled to have here with me today my panel. We're not going to have slides, we're just going to have conversation today, folks. So first, I'd like to welcome Soon Warburg-Clausen. He is the VP of Financial Crime Prevention at Avallone. So Soon, why don't you give us a little bit about your extensive and amazing background in this arena?
Yes, and thank you. Yeah, I'm Sune, and I'm responsible for our financial crime prevention services and our customer success team at Avallone. I have been working for Avallone for nearly 5 years now, being a part of building up this amazing company. Before that, I had 23 years in one of the largest bank in Denmark, Danske Bank. And the last 10 years, I worked with operational risk and compliance risk, and I was in the end SVP and group responsible for our SAR reporting. So that's kind of my background.
All right. Thank you very much. Soon, before I forget to mention, there's a lot of amazing blogs and information on the Avallone website, and especially on the fraud crime prevention front. Soon has some amazing blogs, so I encourage everyone to take a look at that content as well. Also with us, honored to have Leanne Perkins. She's the assistant treasurer at Ankara, and she is an inspiration to me on how you can give back to the treasury profession. So Leanne, why don't you give us a little bit about your background and just give us a little teaser about what you're thinking in this area, and maybe a little bit about the conversations you and I have had recently.
Sounds great. Hi to everyone on the call, and hi to Soon and Ernie, and thank you for having me. It's really good to be able to discuss such an important topic. I have about 2 decades of treasury experience on the practitioner side. And what I will say at this point, I'm still in the learning phase of my career. So I am very happy to get the opportunity to talk to others and to learn from top tier talent like Soon with your background in financial crime. I think that's really important for this conversation today. And I think also that the Treasury Department has such an opportunity to positively impact our companies, and it all starts with just managing the risk. As Ernie said, my name is Leanne Perkins. I'm the head of Treasury for a global company that operates in many complex countries around the world. So that being said, it means I see the word KYC and counterparty a lot. And more about my truthful reaction to that later. But in the meantime, I am an advocate for the profession and the advancement of the industry as a whole. And I really look forward to this session because it revolves around the discussion of risk and its association with KYC and our counterparties in general. And I think we've had such great discussions, Ernie, lately on what is KYC and what is the role of Treasury in ensuring we are managing the risk for our companies. And it is, and everyone on the call will agree and has dealt with this from time to time, that KYC is a very time-consuming, repetitive, cumbersome task. However, it is essential. So we have to know what the purpose of KYC is in order that we can put in the effort involved to give the banks what they need to ensure who they're dealing with is not a risk to the bank. And at the same time, on the counterparty side, companies have to make sure they know who they are dealing with as well. So despite the frustration and the efforts involved, it's still a process that should be respected from the treasurer's practitioner's point of view.
All right, thank you very much, Lance. So I just want to give everyone a little roadmap for our conversation. Here, we have already talked a little bit about KYC and Treasury. I'm going to do a very brief overview of what we normally think of as KYC. Then we're going to talk a little bit about the challenges of what we normally think of KYC. Then I'm going to let Soon share with us how there are some solutions out there, relief, automation, and AI, the role that plays. And then we're going to talk about the evolution of KYC. So I call that nuisance to counterparty risk mitigation. And then we're going to take a look back at these pain points and talk about how they're even more magnified when we change our perspective. And then Soon's going to share with us how technology is available to help us really own this role. And I want to say what I've seen from my research is the reason that Treasury gets called to the strategic table more than anyone ever talks about is risk mitigation. That's where we have that, and this is a place for us to make that impact. So before we really dive in, I want to just level set a little bit, everyone. So I'm going to go ahead and launch a poll here. I just want to get a sense of where everyone is at in terms of how involved you are in collecting and managing KYC related information. So if you can just take a second to answer the polling question, I'd appreciate it. And when I was in Treasury, I didn't really realize it, but I was very involved on this side. I was the hub of the company information. So when legal and M&A wanted things, they would come to me. So another part of KYC that I have come up with myself is like know your company. So you also become that resource in working with legal and tax. And guess what? That helps us become a trusted advisor to legal and tax and the CFO and the board of directors as well. So I'll go ahead and leave this up for just another few seconds or so. Again, I just want to level set to give our conversation some context and see where we might focus a little bit more to be in tune with our audience. So I'm going to give you guys a couple more seconds. Again, I appreciate it. Just go ahead and click on the poll. So let's go ahead and, all right, let's go ahead and close the polling question here. There's some latency here. So give me 5, 4, 3, 2, 1. All right, let's check that out. All right, let's go ahead and take a look at the results here. So what we see is providing information to banks, and that's 26%. And I'm actually glad to see that that's a little bit lower. So we're seeing that people are evolving. So we have almost half providing information to banks and other counterparties. So I'm actually glad to see that, right? Requesting information and providing information internally beyond Treasury, right? So interesting. So I'm glad to see those results. Leanne, does anything stick out from those results to you at all?
Yeah, I mean, I will agree with you in saying that it's important to see this counterparty risk is becoming more internal to the Treasury Department, because like you alluded to earlier, when we started our Treasury careers, it was very much about the bank and our risk to the bank. But now it's about not only the bank's risk, but our risk as vendors and suppliers as well. And I also just want to pin off something you said earlier, Oni, is that in the Treasury Department, as I have seen it evolve over my 20 years of experience, is we are not just that department that is interfacing with our stakeholders internally, like you mentioned, tax and legal and AP and auditing, but we're so much more of a front-facing department these days, where we actually deal so much, a lot of our time is dealt with our banks, our shareholders, our rating agencies, our customers even. And it's that relationship coupled with our internal stakeholders that provides that stepping stone for us to become more strategic as we operate. So happy with these results. I think it's what I am seeing as a practitioner and what I see in the industry as well, and glad everyone is managing the risk that's coming to us as companies.
Great. And Soon, I'm going to get your thoughts as well, but I also would like you to maybe comment on, have you seen the conversations with companies changing especially given 2025 and all the counterparty risk that's been going on with compliance and regulations. Have you seen that shift, that KYC to KYCp shift at all? Are you seeing that trend yet?
Yeah, definitely. And I think this shift from it's only the banks that was a part of this KYC request to that is also other counterparties. I think that's something we have seen a lot, and we have actually seen it just growing over the last years, right? And I also see that there's kind of a start to being a bit more focusing on other stuff in the KYC. So where before it was mainly on who was controlling the companies and the basic information, I think we also see more extended questionnaires that is asked. So involvement in the area.
Okay, thank you very much, Soon. So let's go ahead. And just start kind of at a top level. So KYC basics, there's really three main areas. We're going to have some acronyms here, so hopefully they aren't too bad. So we usually start with a CIP, right? And that's really just the main thing, the date, the information, just the know the companies exist and they're out there. And then we go to the customer due diligence, which is getting a view of the financial health of the organization, just right there. And then enhanced due diligence is really on the monitoring side, right, of that health. So to me, I think we've had this limited view where we are focused on the CIP side a little bit. And then Soon, I want you to go ahead and give me color around your overview and then share, especially on the CIP side, how that's just not a given anymore in the fraud and all that stuff. So could you help me out with a better overview there?
Yeah, so first of all, I think KYC today is much more than CIP, right? So it's definitely going more into the due diligence part and enhanced due diligence, especially if you are in certain industries and operate in certain countries, right? Then you would meet more and more qualitative questions in your KYC processes. I think the whole CIP area is something that is going to be challenged the coming years, because with what AI can do now, already now, and we know maybe already tomorrow they can do so much more, right? So I think that's a huge challenge with how easy it is to make a passport that looks exactly like a true passport and stuff like that. I think it pushes a bit to the way that many companies are doing it today, especially when it's from business to businesses. I think there's still kind of a trust between businesses that helps a bit on this, but I definitely see that there will be an escalation on how to identify people going forward. I saw Company House in UK. They kind of now wants all senior people and UBOs to go in and get certified their identity, online with passports or by professional. I think we will definitely see a big change in how we share like passports.
Absolutely. I mean, it's amazing. So, but we'll dive into this later. I always like to give the preview. So we're talking about, right, CIP and fraud there in all these three areas, but then we also have to look downstream. So now we're looking at our counterparty, but what about their counterparty, and what about compliance, and where are these goods being shipped from, and how do I know they're not going through a pass-through so we're not violating things? So I always like to jump ahead. Leanne's like, no, not yet. But like 10 minutes. Okay, Leanne, give you your chance. You hear KYC. What's your reaction when I say KYC? What's your emotional reaction?
Truth. I said I would be truthful in the opening. So
yeah.
When I get the emails for KYC, I definitely sigh. To be honest, it makes me feel frustrated, because despite all of our work over the years, the process is still so largely manual. It's exceedingly repetitive, and it's oftentimes disconnected between banking partners, but also between one bank in different geographies. And to be fair, though, it's not just the Treasury practitioner that struggles here. Our banks do as well. And I had a banker once tell me that for him, KYC meant kill your customer. No further comments on that. But At the same time, it is a very responsible task. And for the most part, the Treasury professional is ultimately accountable for this information. So we have to take it seriously. As I said earlier, we have to understand the purpose of KYC. And that being said, that it protects the financial system, prevents fraud, and ensures compliance. We do have to take it seriously. We have to invest time and effort into it. But we're begging for a solution. We're begging for automation and for a way to make this an easier and less time-consuming task for the practitioners. Or we're waiting for that to come to fruition from our banking partners and vendors and customers like Avallone.
Yeah, I mean, those the pain points that you've kind of touched on. You're getting requests from multiple banks for different information from the same banks. Information, you don't know where to get the data. It's manual to pull the data together, and you just don't have a lot of support. It doesn't get a lot of internal, I would say, love, right, about the whole thing. So soon she teed you up perfectly. I shouldn't have jumped in there. So share with us, what are some of the functionality in the solution that you guys have developed that will help with these start to get us where we can lessen our KYC mistakes.
Definitely. So first of all, I think Avallone was kind of founded to help out on these issues. I self have worked in a bank. Our founder and CEO, Anders Meinet, was head of compliance in Danske Bank. And what we saw was that internally in the bank that was struggling with handling all the KYC information, but also the input coming from the companies was quite bad, right? So it was kind of a double struggle. So customers were annoyed about it, and at the same time, the quality coming in was not very good. So the whole start of Avallone was we have to fix this. If the companies can't deliver quality data to the banks, they will never solve the problem. The banks can't solve it themselves. So need the company to also do their part of it. So the idea with the Avallone platform is to have one place with all your relevant KYC information. It's a secure place. It's a place where you can share it from, but also a way to kind of decode the questionnaires from the banks, because it seems like every bank has different questions. But if you really start mapping it up and try to look at the different way they have the languages, truly 80% of the questions is totally the same. So what the Avallone platform does is kind of decoding that and give you suggestions to how you can. So you have questions. Yeah, sorry. So you have questions. Sorry, there was just one walking into the room. So no. So what the Avallone system does is kind of decoding the questions that you get from banks, so you can reuse questions from a former questionnaire that you have used. So when you first get started, you have data in the platform, you can reuse it cross banks. And what we have seen for customers is that they kind of can 5x they can spare 5 times the time that they're using on a case, right? So if you use 50 minutes in every single case before, they can do it in 10 minutes with technology, right? So there's a lot of time to spare, and to be honest, I think maybe even more important, a lot of frustration to spare, because you just want it off your disk, right?
Right. So I know you guys have been having conversations with banks, Anders particularly, the CEO. What are you seeing? And I'll let Leanne see what she's been hearing. What do you get as a general sense? Do you feel that banks are looking to invest in making this easier? It's just not a priority, or where do you give us a sense of what you have heard from all the conversations that you've been having with banks?
Yeah. And as I do this often in a global company, the banks really want to make this easier. It's not a fun process for them either, for the most part, but their hands are tied mostly because of the regulatory requirements and the risk policies that a bank has. And I agree with what Soon just said. Is for the banks, they let me know that it's this inefficient transmission of data from the companies that's a challenge for them, because we don't always, follow the rules by entering every single piece of required information upfront and doing the work that the bank requires of us. So it's a challenge for both sides. It's very manual. It's an inefficient system. So the banks want to make it easier. There's many banks, one global bank in particular that I use, that has been exploring shared KYC utilities. And they do have a dedicated portal where you can upload information. They save the data for 2 years. So if they refresh the KYC, they have a lot of the data on hand, and they actually tell me which number in the document needs to be updated. I don't have to redo the whole thing. So while the banks have a lot more resources than we do, it's really going to be a operational burden on both sides for us. But if we can be honest with the banks and we can share openly the burdens we have, then I think we can work together to create some practical solutions for changes. So I don't think it's just a problem for the practitioners, it's on both sides.
Yeah, so what are you hearing?
Yeah, if I could add to that, so I think definitely banks always want to make it easy for the customer, but I also think within KYC, they often fails doing that. And one of the reasons for that is that the internal cost for banks in KYC is extremely high. So they are still focusing on internal processes to be more efficient. And for example, online platforms is a big advantage of the banks because they will be feeded directly into their own data tables, right? And for most customers, it's also a really good idea because it's easier than using a PDF. But what we see for very large and complex companies, it's a bit annoying with all these different platforms because it's even more difficult to reuse data, and you have to get passwords and you have to log in and remember them, and you know all that. So that's also a part of what we're trying to solve, because that's not the good solution for big companies. Another thing that goes in the other direction of making it easier for the customer is, I think banks also start thinking we can't take the entire risk. We need to push some of the risk back to the company, which means what they require from their customers increases. How are they handling their customers and counterparties and all that thing? Yeah.
Soon, do you think the banks? So we're seeing some of our banks partnering with fintech partners like Avallone to maybe white label and leverage what you guys are already doing, which we would all love to see. Are you seeing some appetite for that, or you think it's a ways off for them to really realize that that's what they need to do?
No, we definitely feel that some of, especially the big banks who know that this is a problem that they have to solve. I don't think they necessarily know exactly how to solve it, but one of the ways is if talking to customers or companies like ours, right? And I definitely think, again, banks want to make it easier for their customers, so they're kind of struggling between being compliant, not have problem with the regulators, and then at the same time make it easier. So there's a lot of interest for that. Yeah, definitely.
Can I jump back in there?
Sure.
Just to comment that, while we're grateful that there's tech companies out there and others that are working on these solutions, for the practitioner's company, it's a heavy investment in these systems. So what some of the challenges we've seen is that, a vendor has a system and a tool that will help automate KYC, help us get the data to the banks, but not every bank is going to accept that. And unless you know which of your banking partners will accept that information up front, the ease of getting budget diminishes. So we have to just make sure that these solutions, while the only way to mature is with automation, we just have to make sure these solutions we invest in will pay returns and dividends going forward, that our banks will actually accept them.
Yes.
Just a caveat.
Yeah, I fully agree. And I think there's been a lot of attempts for different ways of kind of making these tools where you can reply to a bank in an easy way, and most of them has failed. And I think one of the reasons is exactly what you point out, that if there's a requirement that the bank should be a member of that or signed up for that services, then it will be impossible. It's extremely difficult to get all banks accepting the same tool. What we're doing in Avallone is that we both allow our customers to send data in the format that we are providing, but also to use the templates and the questionnaires that the banks has to fill in the information in that. So you can decide if you want to provide in the format that the bank asks for, or you want to do it in your own format. And I think that's needed because we can't make agreement with all banks short term.
Yeah, we can't even get all banks to accept digital certificates and signatures yet. So got a way to go. But grateful you see the issue and you're helping both sides of the problem here. It's great.
Soon, do you see us? Are you getting to the point where you are going to really just market and announce, like, we work with these banks, right? You get to that point where they're almost certified, right? We work with these banks, and this is where we're finding traction. As a practitioner hat on, that's what I see. Is I'd love to see, like, I'm not going to say bank name, but Bank X. Oh, Bank X, works with a tool like Avallone. So this is the translation is kind of already there, so it can be like a more of a seamless process, I would say.
Yeah, and sometimes this can feel a bit like the hen and the egg, right? Because it's really difficult to make an agreement with banks if you don't have a lot of customers that want to deliver for that channel, and it's difficult to get the company to sign up if there's not a lot of banks signed up to it, right? So what we have focusing on is to have a solution where it's easy for banks to accept it because in their own format, which means that we have plus 100 of the banks that accept packages for us, but where we don't have an official agreement with them, right? It's just our customers sending them information and they have agreed to it. That doesn't mean that we don't spend time on talking to banks and maybe we want to have more formal agreements, because I think that would be a great help on both sides if there was a closer cooperation, for example, feeding data instead of documents, right? So so that's definitely something we do.
Leon, let me ask you. So you obviously have a lot of conversations with your peers. Are you hearing the same challenges? And then I guess my better question is, are others starting to see that banks are asking even more information or different types of information? It's evolving, like, almost in live time as they respond to market conditions as well.
Yeah, this is probably the number one thing we discuss as Treasury practitioners in our networks. Is it's a frustrating issue for all practitioners. And we spoke recently about the use of AI in KYC, and the question was asked to the audience, like, if you could just have one thing that would make KYC better, what do you think it would be? And we tend to believe that the use of AI in this area will help, because as you just mentioned, the banks it's not a static process where they ask a certain amount of things and off you go and it's approved and carry on. It's getting more and more involved in this global economy with the geopolitical risks our companies are facing in those areas. So it's getting deeper and deeper into the requests. And it's taking up a lot of the Treasury practitioners' time. It's almost like you have to have a dedicated role for KYC right now. And getting resources, as everyone in Treasury knows, is very challenging. So we definitely talk about it a lot. We are looking for solutions. We've been in different groups along the years where, Swift tried to have a portal, and there were just many different companies that came up with solutions for KYC, and we haven't reached the point yet where we found something that is a shared utility for practitioners. But I do think that AI here is the use of it is going to be what's going to help us going forward.
Yeah, I think that's, to me, where when I started talking to Avallone, and I kind of sought them out because I kept hearing about KYC, and I talked to Anders, and what I got from, as well as other Treasury solutions that we have, you can tell immediately if someone who came up with a solution had the face of pain. So I think that's a big thing in Avallone, because they have Soon and Anders that have been doing this on both sides, right? Especially the bank side. So they really understand the challenges and they really know the weeds like nobody else. So that's where we get lost, Leanne, of course, is the weeds, and how do we help everyone get out of the weeds so we can make that connection soon. Any additional thoughts on that front?
Yeah, but just saying with the latest things in AI with the LLM models, I think ChatGPT, etc. It's a huge opportunity on this area, right? But there's also a lot of pitfalls. So we're definitely building in AI even more than before into our platform because we can now do things we couldn't do when we started up 5 years ago, right? So there's some really good opportunities. But also we can also see there's some issues with it. I think we had a customer asking why shouldn't we just use Copilot and SharePoint instead of Avallone, right? But it's like SharePoint, large companies have millions of documents, so if you want Copilot to start just digging into that for answering to KYC, it will not be efficient, right? So you still need to be smart about it, but I definitely think that should and will be a big time saver in the future.
Yeah, and also, one of the major challenges with KYC is the security of the information. I mean, we have executives' information, their passports, their social security numbers, their driver's license. So, your comment about just using SharePoint or Copilot, you can only do that if you have absolute stringent controls around that information, that the data is not going to get out anyway, because this is personal information that is impactful if it gets outside of the company. So it's that security level, I think, which makes systems more challenging for those developing them and for companies wanting to use and buy them, because we just have to be sure that the data is safe.
I fully agree. I think also we see that senior people who is delivering their passports to everywhere in the organization is asking, what are you using for? Who do you share it with? And with a tool like Avallone, you can actually give an answer to that, where if it's just one, you actually don't have that, right?
And I'm probably dating myself here, but sorry to jump in there, dating myself here, but I used to have to ask for executive information for banks, insurance, or whatever that is. And we all will know they're not happy about that. It's not like they're going to give you a lollipop. Hey, I want to give you my passport. And I don't think we talk about that enough in Treasury, the pain of doing that. And then the value of having that all in one place where we can share that, Leanne, like you said, like it's going to be accepted, not having to go back to our executives. That's the last thing that they want to talk to you about.
Yes, because you want your executives to know you, and you want them to know the strategic value Treasury brings, but oftentimes they know you as that person who's always asking for something for the bank. So, so you want to try to avoid that, and you want to keep that information secure, but it's a kind of a fine line.
Yeah, I think we've talked through this, but let's dive in a little bit deeper. So I think we've done a good job of saying, okay, we have this traditional view of KYC, and the expanding perspective is KYC counterparty. So counterparty can be if your banks are asking for it, but more importantly, internally as a company, so we understand what our counterparty risks are from our suppliers and our customers. And really on the compliance side, you don't know what you don't know. Of course, soon I'll let you comment here in a moment, but I don't think people have any idea of the risk of having that go sideways on you. And so from that KYC perspective, so I know there's different modules in the Avallone solution. One is the responder, which is the automating piece, but then there's the other two pieces and other pieces, which I think are the big challenges are, one, how do I assess the financial health of my organization? And secondly, how does that get updated? And how do I proactively know when things are changing? Soon, you want to comment on those areas or give us your insights there?
Yeah, so I think the whole counterparty assessment thing, called KYC, know your counterparty agenda, right, is really, really growing. And I think especially after Russia's invasion in Ukraine, that with all the sanctions that follow with that, there's a lot of focusing on that. So what we see is that more and more non-regulated companies are starting asking their counterparty, like customers or suppliers, traditional KYC information, but also doing screenings, screening for sanctions, and reverse media really want to know what kind of risk they are exposed to if they have a certain counterparty. And you could also see that in your questionnaire or in the poll that it's not only banks asking, it's also your counterparty, and that's simply what it is, right? That more start asking. And I think that is also that banks want to see company that they are managing the risk, not just being able to reply on some question, but also they will see, especially if you are high risk, you will see more and more question about how are you running your processes and how are you doing that. And banks will expect to know that. Will be expect to say, who are your counterparty and how do you do for financial crimes?
Yeah, so Leanne, how are you? I mean, how are you dealing with this situation here? So let's say you get the financial health and they get credit approval or whatever. What if something changes? What resources do you have, or how do you even imagine to stay on top of that? If something major changes in their financial health might go sideways, how do you deal with that, or how would you like to be able to deal with that?
Yeah, I mean, how I would like to be able to deal with it is to have like an automated load.
Yeah.
And so we know something is updated and we know how to deal with it. And I think the same for the banks, when they're working on reviewing our company's risk, we should be providing information to them proactively when something happens. And it's a whole lot easier when you work in a public company because information is out there, particularly financial, and it's not as challenging. But when you're dealing with private companies and there's a lot of levels of ownership, it definitely makes it difficult when things change. So in Treasury, we have to do our part by being proactive and ensuring that we have the right information that we can send to our partners and bankers. But I also think what we're seeing is with the complexity and the volume of these types of requests, it's looking like the need for compliance departments is greater than ever before, because Treasury, while we need to add value and be strategic, we don't necessarily have the resources for all this review and additional paperwork and challenges that come with this counterparty risk or additional KYC. So we have to make sure we're staffing correctly so that we can adhere to the requirements that are coming our way, because it is incredibly important. And as the world changes, we've seen, counterparty risk becoming more important with supply chains, banking networks, and vendors changing. They've become riskier and more complex. So this is, in my opinion, counterparty risk is not a bank-imposed exercise. It's something that internally we should have in our enterprise risk management protocols.
Yeah, Sue, now let me ask you the question here. So this is another webinar. We'll talk about how to implement the KYC program and what that looks like. So we have a couple questions about who should own KYC. And I think from my perspective, especially from listening to Leanne, it's got to be, and I know we don't like to have a lot of committees, it's almost got to be some sort of team, right? I want to have Treasury, I'd want to have someone on the customer side, someone on the supplier side, and then legal side. So Sue, how do you see companies embracing this challenge and that new counterparty risk perspective?
That's a really good question, and I think the problem is that often KYC is the task nobody wants to do, right? So therefore, it ends with the one who has the biggest problem, and that's often a Treasury, because they need bank connections, right? But I think if you talk about first of all, if you talk about responding on KYC, I think it needs to be a cooperation between different. So I think it seems natural to have it in Treasury, but there's also information you need for senior management. There's information you need from the legal department and all that. And that's why also you need to have tools where you can do cooperation and make sure that different people keep the data updated. So one thing is apply, another thing is to get the data that you need to do the reply for, right? When we talk about the counterparty due diligence, collecting, screening, handling alerts and all that, I would say you should build some professional teams that can do that. I think it's a very different task compared to what you normally do in Treasury. And if you want to do it in a proper way, you also need someone who is skilled for it and who likes to do it, which I think maybe is the most important point, that if you want to do something good, you should also like to do it right. So and that could both be creating a team internally, but it could also be to kind of delegate it to some managed service externally, like we do in Avallone, but also there's a lot of other vendors for that, right? I think the professional skills is important here.
Yeah, but I totally agree with you, and particularly on the legal side, we shouldn't be sending documents out the company that legal hasn't reviewed, but we also need their input. So I think having a RACI chart and stacking it correctly is how you get all these different people together and ensure you're getting the information. Otherwise, if everyone owns it, no one does, and then it just falls on Treasury, and it's just another task to do.
Yeah, I just want to dovetail on a comment that Leanne made about getting information about private companies. So I'm dating myself again. When I was in Treasury, they had this branch called Competitive Intelligence, where we try and find information on private companies, and you couldn't find anything. I mean, there was like nothing out there. So Soon, can you give us some insights on where you guys compile information, or do you have information fed into your system? So, how do people tackle that, or how have we evolved in getting that information?
Yeah. Yes. So basically, you can say in the KYC tool like ours is a transparency and sharing information, right? Collecting and sharing information. That doesn't matter if that's external you collect from or share with, or it's internally. So our tools is also made for have a secure ways to collect information internally in the company. So for example, sending out a small request for a passport, or this questions in this questionnaire you can send to the legal person that can go into the system and handle that. So I think it's all about to have some good cooperation tools in your software, right? And also to make sure that everybody have access to it and can work together. I think it is a collaboration task at KYC. I think it's really rare that you have one person that can sit and know everything that is asked for.
Yeah, I think another, just along the competitive intelligence side, when I was in Treasury, we had field service engineers and people that were close to the markets and the customers, and they had all this amazing information that would have impacted our decisions until we could understand our risk. But that sat in their department, in their folder. So I think a huge benefit of having a KYC platform is everyone has access to the information. And when John says XYZ company, sales going to go down by 50%. Well, we need to know that, right? So I can't imagine, Leanne, how many systems you wish you could tap into, because it's there maybe, but you don't have any way to consolidate or pull that together.
Yeah, and that's why I'm such a huge proponent of enterprise risk management, because it's exactly as you've described. If you have a system where the information resides and everyone has a different type of access, then you get the information you need and you have a holistic view into the risk of your customers and anyone else you're dealing with. But it's the data sits siloed in so many places, and that's for everything we do in Treasury. We were talking earlier about forecasting before this webinar. It's the same thing, where people have information that you need, but it's bringing it together to the right people who need it. That's the challenge. That's the challenge of working.
Yeah, Soon I want to come back to you a little bit on the whole financial crime prevention side of it. Can you dig us a little bit deeper on that side of it and the risks that are out there, and how KYC is helping in that area? So I know there's legislation that passed or may not have passed. So are there any regulations and laws that you might want to share that really should help motivate people to pay more attention at all?
Yeah, but I think first of all, regulation is kind of being broadened out more and more, right? So it's more and more company that is regulated, so more and more needs to kind of collect this information. But and KYC for me is the core of the discipline. So this is where you really get the insight you need to do all the other risk mitigation actions. So the monitoring of what's happening, the reporting to the authorities that can kind of use this information to fight financial crime, right? I just posted, I think it was today or yesterday, an article from FinCEN about how young people are misused for financial crime, right? Online, and how AI kind of support perpetrators on that. I think this is just something we always need to remember when we think how annoying KYC is and how it is we have to do it. But the crime we are trying to prevent behind this is really, really bad, right? It's real crime, it's trafficking, it's modern slavery, it's drugs, it's all bad things, right? So I think it's important that way.
Yeah. I think another value in the information side of it, which also I dealt with in my past, was we had salespeople going into countries and doing business, and they weren't really too concerned about what they should and shouldn't be doing. So having a place where they can come, or we can send out alerts like, do not sell, do not do that, staying on top of all these different regulations and compliance issues to those folks, and giving them a place to, now they can say they're not informed, but now we can say you are informed, this alert went to you. So I just curious, soon, have you had conversations about that with companies? And then
yeah, I think maybe also we are past the place where you could say I didn't know, because people say you should have known, right? So I think a lot of this with the counterparty due diligence, or know your counterparty, and the screening and the adverse media and all that, is saying if you should have known, you should have reacted to it, right? So you can't just claim you didn't know because you didn't do anything. I think maybe that's kind of the big shift you see at the moment, that doesn't fly, right? I think a good example we have from Denmark is it's a company who's making painting, a Danish company, and they sold a lot of paint to Russia, and then the sanctions was imposed, and suddenly they sold a lot of painting to Kazakhstan instead, right? Then they said, but we didn't know that the painting from Kazakhstan went to Russia. Somehow they should have known, right? If suddenly the sales just go from one place to another place, there's probably a likelihood that it ends up the same place, right? So I think we'll see more and more on that the expectations to the companies and what they should have known is just increasing. Monitoring and screening and all that is an important yeah, sorry, to solve that, right?
Leanne, what are thoughts do you have to add here, and how do you I don't know if the right word is insert yourself, or have your ear, or have connections with your insurance people, because our insurance was based on where people went and how many days went there and all that, besides doing things they're not supposed to. So how do you listen in and try and inform folks within your organization?
Yeah, it's a good question, and I like what you've mentioned, Soon, is because it really is about knowing what the customer is doing. Compliance might be the origin of all of these things, but the destination is really about the risk and the intelligence of understanding that risk. And this is also where public companies have an advantage, because they have well-resourced audit departments. They have, SEC responsibilities in the US and other regulators abroad. But if you have internal audit departments, you typically can have these structured approaches to what you can and can't do, and you have reviews of information, because it's no good just having a policy if you're not testing it. And that's why private companies have to work harder. We have to make sure that we have these processes in place, we have the testing in place, and we have education so that everybody knows. And like you said earlier, there's no excuse for not knowing anymore. And Treasury is definitely in a unique position, because we are, like I said earlier, we interface with so many people in the company, and I believe we can connect the dots nicely against finance, procurement, compliance, operations, sales. And if we can get that buy-in from the C-suite and from those who are making these decisions, we can help to inform, we can help train what we're learning, such as webinars like this, or from our banks, and disseminate that information so we know the company is doing the best job it can with the information it has. And it's really about each one should teach one.
Right. Soon, let me get your insights here. So kind of a two-part question. First part is, are you seeing any industries or company headquarters locations that seem to have more of an appetite for this the counterparty approach? And the second part is, where would you like to see more focus? Is there certain industries or things you're like, these people really, are about, really should be even more focused? It should be more of a priority to them.
Yeah, so first of all, I think it probably follow a bit the industry. So if you are an industry in high risk products or high risk areas that you are operating, you would see more of the KYC. I think what I would like to see, I think it's not just about being compliant, right? It's also about company taking the responsibility and say, we're not doing this because we have to, but we're actually doing because we want to do the right thing. And I think you often see news stories about companies that is doing something that is criticized, but it's legal, right? And then you could say, yeah, the politicians should just kind of, make more regulation. But on the other hand, we don't want that, right? So I think it's also about saying, hey, we should just do the right thing. And that, of course, differs from company to company where they want to put their risk. But I think good compliance program should be kind of based on that you actually want to do it different.
Yeah.
Can I just respond there? I think that's an excellent way, and from a practitioner's point of view, I think that whether it be KYC or counterparty risk review, it should be that proactive safeguard that's going to support the growth of the company rather than slow it down. And that's what you said, Soon, is it's about doing the right thing because you're doing the right thing, not because there's legislation in place or you're required to for some other reason. It's about safeguarding your company to support its growth.
Right, that kind of dovetails on, you answered the question I was just going to ask soon, which was around when should companies start, right, to address this challenge? And what is the right time? Is there a size, or as Leanne just said, I'm not trying to answer my own question, I'm a good job doing that, is you want to do this before you grow into all these countries, before you do these things. So when you're going to a company and they're trying to look at what's the value proposition, or what's the value, what are a few things that you share? Soon.
Yeah, it's a good question, but I think all companies are different, right? So there can be different reasons. But if you're a scale-up company, maybe you want to do it so you can get funding and you can show you are in control of your of your processes, right? If you are a really large company, like we work with NGOs, their big problem is if they're not in control of this, they don't get the funding to the crisis area they want to send their funding to, which is one of the biggest issues for them to run the programs that they need funding out there, right? If you are an oil company, you need to be in control that you don't sell your jet fuel to the Russian army and stuff like that. So I think there's a different lot of different reasons for it. But I think most companies that is not operating in like boring countries like Denmark, and they maybe even also need it, right? But as soon as you go into industries or areas that is normally considered high risk, you definitely need to start.
Yeah, I would just say, I think we've touched on, so I asked this question, but we've talked about the answer. So it's like, if someone invests in a solution like Avallone, what are the benefits that they got versus what are the other benefits they didn't think about? So the automation piece, the time savings, that's evident. But we talked about a lot of these things, the information sharing, the risk mitigation. It's a Christmas gift. Because of this, we did not do business here. We did not do business there. See, I'm an Avallone advocate already, but anything else that you want to add soon of things you've heard when they've done this, or like, wow, I didn't even, unexpected benefits? I think that's important for people to get at a little bit.
No, I think most of our customer is happy with, getting rid of the frustrations, to be honest, right? So they save a lot of time, but the whole frustration part of it is extremely important. And I think it also sometimes give the discussion around who should do what, who's delivering what, keep the the system updated. So sometimes software can also kind of start the right discussion in the company. But I think what I would say mostly for our customer is that they save time, they get much more structure on it, they come about the GDPR or data protection rules and stuff like that, right? So I think it's all about to get back in control in this area.
Okay, let's start to put a bow on things. We've had an amazing conversation. So Leanne, I'm going to ask you first. So you've done a great job of giving us a lot of information about why Treasury should care about KYC and why the risk counterparty is important. Can you give us like 2 or 3, like just summarized comments of why? So someone on here is like, why? You've done a great job, just to put a fine point on it, to leave that in people's minds with the webinar.
Yeah, I think, we know that KYC and counterparty risk is not going away. So we have to change our mind shift, and we have to ensure that we're not reactive, but we own the process, we can make the compliance easier, and we can make the business safer. And also, we were talking about moving into different countries as companies grow. Make sure you have Treasury involved in those conversations, because if you can't open a bank account or you're unable to fund that account, there's no point going into that country if there's all these compliance issues that you are not able to overcome with banking. So keep Treasury informed, and Treasury should understand also why it's important for us to be informed. And that's one of the reasons, is to make sure we can future-proof the company as well. And also that this is, for the most part, a risk management exercise. We have to do it. It's helping our companies, it's protecting our companies, and it's helping us as treasurers to provide more value to our companies. And I just think it's really moving from all of that compliance fatigue to the risk intelligence part of it that Treasury is so good at and so valuable to the company for.
Okay, soon I'm going to ask you, I'm going to note here, I'm going to launch our final polling question here while soon. I want him to give us 2 or 3 things that you'd like to leave with the people that have attended the webinar, but also the hundreds of people that are going to listen to our great conversation afterwards.
Yes.
Soon?
Yeah, but I just want to say that I fully understand the frustration. Not a lot of people love KYC. We do it at Avallone, right? But not many other places. But there is software out there. Avallone is definitely one of them that can help out. And I would say some of the frustration I heard from Leanne, we could definitely set some check marks for that. So I think tooling is a part of the solution, because KYC sometimes doesn't sound that complex, but it's actually extremely complex, and if you work with it right. So it's a complex thing. You often need system to solve it.
Okay, thank you so much. So one more time, Leanne, thank you so much for your time and your insights. Extremely appreciate your practitioner perspective, as always, incredibly valuable. So thank you, Leanne. I want to thank Soon for your time and your insights. I want to thank Avallone for partnering with me. So this is our first webinar. We are going to start promoting our next webinar, which is going to be on October 8th. So stay tuned for that. And everyone on the webinar today, have the courage to live your Treasury truths every day and dare to be great in everything that you do. Until next time, everyone, make the rest of your day great.